Sales turnover and sales return journal entries with reasons. Sales turnover. If goods are sold for cash, then journal entry will be: cash account is debited and the sales account is credited. Reason: increase of cash asset is debited. Increase of revenue sales is credited. Credit sales. If goods are sold on credit, then journal entry will be: account receivable account is debited. The sales account is credited. Reason: the increase of account receivable asset is debited. Increase of revenue sales is credited. Sales return. If goods returned by customer whom goods were sold for cash, sales return account is debited. Cash account is credited. Reason: decrease in sales is debited. Decrease in cash is credited. If goods returned by a customer whom goods were sold on credit, sales return account is debited. Account receivable account is credited. Reason: decrease in sales is debited. Decrease in account receivable asset is credited.
If you like a video, then please subscribe to our channel and press bell icon for regular updates.